Hello students and welcome to this first explanation on contract costing. This is question number 1 and it is called Cocoa Limited. So this question covers contract costing and the required part specifically requires of you to do the T account or aka the ledger account of this ongoing contract. So if we read together, it says Cocoa Limited started working on a contract on 1 April 2018. The contract price is 10 million and the target completion date is the 31st of May. On 28 February 2019, the end of the company's accounting period, the following information is available. Now they've given you a list of items. So they have material sent to the site, material returned to the storeroom, equipment sent to the site. Please note that this date that the equipment or even machinery is sent to the site is very, very important. Then material transferred to another contract. Then material on site at the end of the year. There's some plant hire costs, some wages that were paid, direct expenses that were incurred. Then there's a balance on 28 February 2019 for work not yet certified. There's some cash that was received from the client. There was some material that was sold. It had a cost price of 4,000, a selling price of 5,200. There's accrued wages at the end of the year. Then they ask you what is the equipment value at the end of the year. And then there's also a subcontractor fee. In the additional information, it says the client has paid for the completed work but retained 20% of as a retention fee. The depreciation is charged at a rate of 25% per year. Manufacturing overheads are absorbed at a rate of 5% of materials used, and the head office costs is 120% of labor costs. And then in the required part, they ask you to do the T account for this information or for this contract that was given here. And this file also contains the memo already, but I am going to explain it on an Excel spreadsheet as well, just to make sure that you understand where the figures came from. All right, so what I am going to do is I'm first going to open my template. So this is the template for the contract account that I have uploaded to Blackboard. Now you will see this contains a number of items both on the debit and the credit side. Please note that for the contract account, the debit side is where we have all the costs that are incurred, and then if anything is sold or returned, then or there's any balances, then it goes on the credit side, except for balances with regards to arrears expenses. All right, so I'm going to take this template and I'm going to copy it onto a new Excel spreadsheet, and then I am going to show you how to use this template to answer your questions as it relates to contract costing. We just fix it somewhat. It looks a bit dilapidated. All right, so here we go. Let's see how this can work to assist us to answer these types of questions quite easily. What is required of you is to go back to question 1, and now we are basically going to build a puzzle in order to complete this contract account. So the first item that I see on question 1, so I'm now going to go through the items as they are listed here, and then we will mind these items last as they were the additional information. So let's just first look at the table given in question 1, and then we're going to put the information into our T account as necessary. So the first item I see in the table in question 1 is materials sent to the site, and I see 1750000. The next one says materials returned to the storeroom. So this will be materials returned to the store. That's going to go on the credit side because it's going to reduce the amount that we've invested in the contract. So there we go, the 15,000 returned. Then it says equipment sent to the site, 3 million. So we're going to fill that out. Then it says material transferred to another contract, 100,000. So I said materials transferred out is 100,000. Should materials be transferred to the contract, then it would be on this debit side. But since it's going out, the contract is worth lesser because we're not going to be able to use that material anymore. Then we are on the next item. It says material on site at year end. So that will be the closing balance of materials, and that is 40,000. The next item is plant hire costs. And plant hire, there we go, and that was 200,000. Then we need to go and look at the next item, which is the wages paid. So I'm going to put it here, labor wages, 105,000. The next item was direct expenses, so direct costs. There we go. That was 40,000. So as you can observe, I'm literally just taking the amounts and slotting them into the right line item. The next line item on question 1 is the balance of the work not yet certified. So there's the closing balance of work uncertified, 230,000. Then the next item I see is cash received from the client. Right, so cash received from the client is going to go here, the last bit of the account, hereby the debtor certified work. So I'm just first going to finish the first items that we need to get a balancing figure for, and then I will continue to explain the next part. So there's cash received of 3.8 million that I'm just going to skip. Then there's some materials sold. Materials sold, we're going to put it at cost price always. Then there's some accrued wages. So it's going to go here. It's in arrears, 15,000. And then there's a subcontractor fee, which is given as 2,000. So there we have filled out all the necessary information that was given to us. Now I'm going to move along to the additional information where it tells us that the client has been using a retention rate of 20%. So the retention rate is important. It goes with this line item. Cash received from the client, and it's going to be the last part that we fill out in the T account. Then it says depreciation is 25% on equipment. Why do we need that? Because we need to calculate the value of the equipment at year end. So let's see, what would the depreciation be? The equipment was issued to the site on 30 April and our year end is 28 February. So 30 April, we will start counting May, June, July, August, September, October, November, December, January, and February. So that gives me a total of 10 months for which we used this equipment. So in order to fill out this figure here, the closing balance of the equipment, we need the carry value. So this will be the carry value of the equipment. So what I will do is I'm just going to scroll down and then I will do a calculation. So if I look at the equipment had a cost price that was sent to the site of 3 million rand. Then we need to go and calculate the depreciation. So the depreciation would be 3 million rand based on the 3 million rand times the 25%, which is the rate of depreciation given, times the 10 months that we just counted, 10 out of 12. And then we can go and get to a carry value by saying it's the equipment minus the depreciation. So it's the 2,375,000 will be our closing amount for equipment. So I'm going to say equals that amount. Right, then what else do we have in the additional notes? It says that the overheads are absorbed at a rate of 5% of direct material used. All right. So now we need to go and see and what the direct material balance would be. And then we need to calculate 5% of it because overheads is 5% of direct material used. Right. So for direct material used, we can basically draw a T account that only relates to material because now this calculation should only be based on material. So here I'm going to just say material or direct material, you can call it. And then the first thing that we have that relates to material was the sent to the site. And that amount of material was 1,750,000. Then we had some materials returned. So I'm just doing this T account now as a calculation so that you can understand where the amounts came from. I saw that if I just explain add this minus this, then students do not understand. You will remember for a material account, it increases on the debit side and it decreases on the credit side. So for the returned, we have 15,000. Then we also have some transfers. And the transfer was worth, I believe, 100,000. Then we had what else? Material on site. So we had a closing balance at year end. That was given to us as 40,000. Then there was also some material sold. Please remember that we need to use the cost price, which was 4,000. The selling price was 5,200. Now we can go and calculate the material used because the material used will be the balancing figure here. So let's see. It needs to balance on this amount on the left-hand side. So I'm going to say that equals this and that equals this. Then we need to go and calculate the material used as a balancing figure. So I'm going to take the 1,750,000 minus all the amounts that related to material on the credit side, and that gives us 1,591,000. And we were told that the overhead should be 5% of the direct material that was used. So I'm going to take this amount then. Where is our overhead? Overheads, there we go. And it should then be 15, what was the amount? 1,591 times 5%. That gives us 79550. Right, let's move on then to the next calculation. If we read the last part of the additional information, it says the head office cost is 120% of the labor cost. So to calculate that, I will simply go to the head office expenses. I will go and find the labor cost. What was the labor cost? Well, the labor cost consisted of two parts. So let's do that as a calculation as well. So the labor costs had some wages. We had labor wages, right? And the amount for the labor wages was given to us as 105,000. Then we also had some wages that were still owed. So the accrued wages will also come into play here because this is the amount that was paid and this is the amount that is still owed. But the sum of the two will give you the total expense relating to the labor wage. So if I look at the accrued wage, it was 15,000, and I need to then add these two together. And that gives us 120,000 Rand. So I am going to base the head office cost on 120% of 120,000 Rand. So for the head office expenses, I'm going to say it's 120,000 times 1.2 because 120% in decimal, if you divide it by 100, is 1.2. That gives us 144,000. All right, so it seems to me like those were all the items that we have to fill out up till this part before we continue with the debtors part. So I'm going to just calculate the total here on the debit side, and then we need to calculate the balancing figure, which is the cost of the certified work. The cost of the certified work will always be your balancing figure. So let's get to the sum of everything on the debit side. And that should then be equal to the credit side. And now we need to go and find our balancing figure here by the yellow amount. So I'm going to take the total minus everything that I have on the credit side so that I can get to a balancing figure. And the balancing figure that I get to is 2571550. All right, so what is important to remember is that in the next portion of this calculation, we carry over our yellow balance here. So these two amounts will always be equal to one another. Right, then we need to go and calculate the debtors certified work. And here the retention rate comes into play, because we need to go and calculate how much should the debtor actually be invoiced for versus what they have paid. So if I go back to my question, I can see that what the client has paid to us, or what we have received from the client, is 3.8 million. However, they apply a retention rate of 20%. So if I look at the math there, I'm going to argue that the 3.8 million that was given as an amount paid by the client represents only 80% of the amount, because the retention rate is 20%. So what does retention mean? It means to hold on to. So if they hold on to 20% of the money, it means the amount that we've already received should be 80% of the money. Or simply we can say it is 100 minus the retention rate of 20% is what we actually got. Now we want to know what 100% would have been, right? So in decimals, we're going to say that 80% is 0.8 if we convert it to decimals, and the 0.8 is equal to 3.8 million. So to get to the full 100%, we're going to have to divide this side by 0.8. So I'm just going to do it like this. Sort out the math. So we're going to have a 0.8 division this side and a 0.8 division this side. And 0.8 divided by 0.8 gives us 100% or a 1, right, in decimal. And then if we take the 3.8 million and we divide it by 0.8, we get 4,750,000. So if we had made them pay 100%, we would have gotten 4,750,000. So the 100% would, or the invoice amount, which is 100%, because we will invoice them for everything, but they will keep a portion until they are happy with the work. So we would have invoiced them the full 100%, which is this amount of 475. So I'm going to go back to my original T account that is required, and I'm going to fill it out. So the rule here is basically you're going to take the cash received and you're going to divide it by the decimal of the amount that was received. So, and the amount that was received is 100% minus the retention rate. All right, next up, we need to go and calculate our profit and loss, because this provision for contingency is again a balancing figure, right? So we need to go and calculate our profit and loss. So how do we calculate profit and loss? Well, we have a formula, all right? And the formula is given to us as the following. It's quite simple. I'm just again going to go and scroll down. So the formula is 2 over 3. All right, so students always ask me, where do I get 2 out of 3? 2 out of 3 is automatically part of the formula. All right, so it's not calculated somewhere. It's the base formula says 2 out of 3. So it's 2 out of 3 times the debtor amount minus the cost of the work certified and we're going to times that by 1 minus the retention rate. That is our formula. So let's go and see. So it's going to be 2 out of 3 times the debtor minus the cost of work certified. So it's basically going to be this amount, which is the debtor amount, minus the cost of the work certified. So that's going to be then 4,750,000 minus the cost of the work certified. That was a 2571550. So we're just going to type that in here. 2571550, and that we need to times by 1 minus the retention rate, which is 20% in this question, right? All right, so now we're going to solve this by saying it's 2 out of 3 times the difference between those two amounts, the debtor amount and the amount as it relates to the work certified. So I'm just typing this into my calculator. That gives me 2178450. And if I say times 1 minus the retention rate, it's 0.8. And now I can simply put everything into my calculator. So I'm just doing this by hand now and not by Excel so that you can see. So if I say times 0.8 times 2 out of 3, I get a profit here equal to 1161840. And this amount, they need to go back to my T account. So I'm going to go and fill it out. 1161840. We need a balancing figure here. So now we're only going to take the debtors work certified here on the credit side. The debit side is going to have to be equal to it, and then the provision for contingency will then be this balancing amount minus the work certified minus the profit and loss. And that means that the provision for contingency is 1016610. Right, and there we have completed our entire contract account. I don't think that this is so tricky. It's just important to remember the formula for the profit portion that we've calculated there. I think the rest is quite self-explanatory. And if you can fill it out like a puzzle, I think that you are more than halfway there. So I hope that you have enjoyed this video, and then I will see you again in the second explanation to question 2, and that question is named Condusa. All right, so keep well until you hear from me in the next video explanation.